Welcome back to FhatBear Pod. I'm your host, PB. Bitcoin's down to 82.5K, huh? A cool 1,500 haircut overnight. Usually the case for more downside on a lazy Sunday when the rest of us are nursing hangovers. Everyone was calling it the last dip yesterday, but the dip keeps on dipping. The total crypto market cap sitting at 2.67 trillion, up 200 billion from yesterday. Up. Can you believe that? Bitcoin's taking a snooze, but apparently the market's like, we're good fam. Here's a couple hundred billies to keep the dream alive. Let's talk volume. 24-hour trading volumes at 59 billion, down 36% from yesterday. Wow, traders really said Sunday? I'm out. Gonna binge Netflix and pretend I didn't lose my shirt last week. Bitcoin dominance, though, ticking up to 61.3%. You love to see it, or hate it if you're an altcoin maxi like I used to be. And then there's the fear and greed index, chilling at 24, almost touching the extreme fear level. This is a level that says, I just checked my portfolio and need a hug. For alt performance, the top winners are Vine, Cat in a Dog's World, Solare, and Core. The biggest losers are Barachain, Mubarak, Particle Network, and Walrus. Bitcoin is just one piece of the puzzle. Let's put it in context by discussing macro. The US Commerce Department dropped the latest PCE data for February, and it's like a lukewarm cup of coffee. Over the past 12 months, prices are up 2.5%, same as last month. Yawn. But here's where it gets spicy. Strip out food and energy. Core PCE jumped 0.4% month over month, pushing the yearly rate to 2.8%. And it's got the market muttering stagflation, like it's a dirty word at a Fed dinner party. Consumer spending? Up a measly 0.4%, which sounds okay until you realize it's basically people buying ramen in bulk because they're bracing for Trump's tariff apocalypse on April 2nd. The vibe? Wait and see. The Fed's not budging, the market's jittery, and volatility's spiking like a meme coin after Elon tweet. Everyone's pointing fingers at tariffs, those pesky import taxes that make your Walmart haul pricier. Great. So we got a Fed too spooked to cut rates and a consumer base hoarding goods like it's Y2K. Now that we've looked at the macro landscape, what's making waves in crypto? Wayfinder was supposed to drop its prompt token in Q1 25. But nope. Posts on X are buzzing that the TGE has been kicked down the road to Q2 because they want a smooth launch. People are saying it's smart to wait out the bearish vibes and tariff chaos rocking the macro scene. Fair enough, I guess. You only get one shot to pop that TGE cherry, right? They've got 41% of a billion prompt tokens earmarked for the community, tied to staking Prime since June 24. Problem is, the market's moodier than a margin trader on a red day. Trump tariffs are tanking indices by 5% or more, and nobody wants to launch a token when the world's busy panic selling. If you're in the staking game, you got until June 27 to lock up Prime for those sweet multipliers. So a couple months ain't gonna kill you. Staking Prime until 2027 is too far away. What's happening sooner? FTX repayments. FTX is finally cracking open its piggy bank. On May 30th, 2025, they're kicking off repayments for claims over 50K, pulling from her $11.4 billion cash stash. Bankruptcy attorney Andrew Diedrich is out here saying they've got 27 quintillion claims to sift through. Sounds like someone's been snorting the hyperbole powder SBF left behind. Billions of those are apparently fake or shady, and every scammer's got their hand out. They've already started paying some small fry convenience class creditors, but the big dogs get their turn end of May. FTX claims they'll dish out 118% of what people are owed. Sounds generous, right? Except it's all pegged to November 11th. 2022 prices, when BTC was a measly $16,000 and Solana was basically pocket lint. So you're getting 118% of chump change while the market's been mooning. Bad news for FTX creditors. But consumer expectations are even worse. The average American consumer's acting like they've just seen a bear market chart. The Conference Board's latest consumer confidence index from March 25th tanked to 92.9, down 7.2 from February, with the expectations index plummeting to 65.2. That's a 12-year low, and it's below the magic 80 mark that screams recession incoming. The sentiment's clear. Consumers are expecting a dumpster fire. This expectation's got legs because it might just make itself true. Consumer spending is 70% of GDP. If everyone's too scared to spend, then businesses tank, jobs vanish, and bam, recession city. McKinsey's February ConsumerWise report noted Gen X and Z slashing discretionary, spending like apparel while stockpiling for spring. Consumers aren't just worried about sticker shock. They're bracing for layoffs and a labor market wobble. We've looked at the overall crypto market. Now let's shift to DeFi. Nasdaq filed a 19B4 form with the SEC to list and trade shares of Grayscale spot Avalanche ETF. Yes, Grayscale's trying to turn their Avalanche trust, a little 1.76 million private placement sandbox, into a full-blown, publicly traded ETF. What's the deal with Avalanche? It's the native token of the Avalanche blockchain, AVAX for short, a layer 1 network that's all about speed, scalability, and flexing on Ethereum with low fees and high throughput. Grayscale's been hyping it as a 3-chain smart contract platform pushing real-world asset tokenization, and now they want to slap it into an ETF wrapper. But let's get real. This ain't a done deal. The SEC's got 90 days to yay or nay this filing, and they've been stingy with altcoin ETFs beyond BTC and ETH. On a different note, PancakeSwap is crushing it with fees. PancakeSwap raked in a cool $4.4 million in protocol fees over the past 24 hours, edging out Athena's $3.92 million. That's right, the bunny-themed DEX on BNB chain is flexing, landing third place behind the big dogs. PancakeSwap's a multi-chain beast, BNB chain, Ethereum, Aptos, you name it, running an automated market maker setup where you swap tokens and dodge centralized middlemen. Their fees? A standard 0.25% per trade on V2 pools, with tiered options 0.01% to 1% on V3. That $4.4 million isn't pocket change. It's a sign of wild user activity, making it the top DEX globally right now. From a DeFi giant raking in cash to a potential new listing on a major exchange. Let's talk Coinbase and Keycat. Coinbase Assets tweets out that they've added Keycat to their listing roadmap. That's the appetizer, not the main course. It means it's under consideration. But you know how this game works. The announcement alone sent Keycat mooning harder than a D-Gen on a leverage binge. Why, Keycat. Base chain synergy is a no-brainer. Coinbase wants its ecosystem to shine. Plus, meme coins are hot. Coinbase got over 150 assets, a user base in the millions, and high fees. A listing there is like a backstage pass to retail money. Just don't ask me why they're prioritizing a cat meme over a DeFi powerhouse like Sonic Labs token. If you look at it positively, I guess Coinbase wants to be retail friendly, giving retail a shot at a possible billion-dollar market cap meme before it gets there. The airdrop of the day is Superform, a cross-chain yield marketplace. Season 1 wrapped up in November last year. Season 2's live now for 21 more days, ending April 20th. Here's how you farm it. Pick a vault. SuperUSD's hot for stablecoin yield, but there's super vaults for BTC, ETH, even other alts you're feeling spicy. Deposit your assets. Starting with $500 should be good here. The more you lock in, the more cred points you rack up daily. If you got friends, snag a referral link. 10% of your buddies' cred, and 1% from their buddies flow your way. Another way to earn more points is buying those Super Friends NFTs on OpenSea. They're still flexing some muscle. If you collect a full set of Super Friends, 7 of them, you can earn boosts to your cred. It starts with a 2x boost from bronze and goes up to 5x boost with ethereal. Don't burn a hole in your wallet trying to buy the most expensive NFTs, though. You may not get that amount back with the airdrop. With that, we're done with this episode. Take it easy this Sunday, and I'll see you back next week.